It's going to be interesting to see where the market opens this session, especially since we have such downward pressure coming in terms of the messaging from the United States.
That implies that there's further significant headroom for an Indian central bank vis-a-vis the Fed to reduce interest rates. And already, if you see that the short end of the yield curve has come down, there was a flattish yield curve for the last 3 years, which India was not used to. That was putting immense pressure on the deposits of the banking system. Once the yield curve again gets upward sloping, you will see the banking system not grappling for deposits, because Indian investor, especially the depositor, is very used to a higher interest rate motivation for a longer period deposits.
Why would they be looking at Indian equities right now when yields are actually looking better elsewhere? If you look at bonds, if you look at gold, if you look at treasuries, for example.
See, I personally think it's all about the time frames. If somebody is looking at something as short term as 6 months to a year, definitely there's no case for emerging markets. There's enough opportunity globally, or in the commodity space or the precious metal space, as you lightly alluded to.